Hello there, BiggerPockets community. Hopefully this is streaming to the proper. There we go. Looks like it's good on Facebook, and also I'm gonna check YouTube. But thanks for joining today on this Thursday. It is, 7:45 Eastern Standard. Normally I am on Sundays, but I have been switching it up. So I'm gonna wait for a few people to join, and I do have some giveaways for some folks. So let me know that you can hear me. Thanks for joining, Anthony, and also you, Will Kelly. Please comment below and let me know that you can hear me loud and clear. Hello there, Karen. Thanks for joining this stream. All right. So a little bit that's going on in my world is just went under contract on a 80-unit apartment that is in Louisville, Kentucky. And yes, I pronounced that Louisville. So getting through the due diligence on that, and just really enjoy bringing value to you guys. So always looking forward to these streams. Normally I get a little bit nervous right before it, but then you just got to push on through it. So, all right, thanks for letting me know that you can hear me, Ed. And the giveaways is going to be giving away 2 free phone calls that will bring tremendous value in terms of I'll be able to provide some insight from my personal experience in the industry for 2 people that share and also comment on this stream on Facebook and also YouTube as well. So let me see if this is live on YouTube. And yes, it is live on YouTube. So those that are here, we've got a Juan Rodriguez, we've got a Joseph Sanchez. Thanks for joining. Russ Brown from San Francisco. I am here in Indianapolis, so please comment below or over to the side to let me know where you are from. It is a little bit rainy here, but not so bad. Indianapolis is always great. And so the subject I will be discussing is the 7 lies or myths that we're told growing up associated with money. And I would say it's more of the millennial generation. So these are, of course, my personal experiences, and maybe the older generation, Generation X, could comment as well. Would love to hear others' feedback. Awesome. Thanks for joining Lee Carter on the YouTube. And give a few more shout outs. Hey there, Jared J. Rock. Thanks for joining. Glad we had that phone call the other day. Thanks for joining. I'm Mike, and we got Denton from Michigan. What's up? All right, so I'm gonna go right into the content. And so just a little bit about myself for those of you who are not familiar with me, and if you're not, that is I take full responsibility for that. You should. I am a BiggerPockets contributor, so I write blogs on their main sites. In addition to that, I own just a little over 300 units, both single family and multifamily in Midwestern markets, Indianapolis, Indiana, some markets in Ohio, and also Kentucky as well. So thanks for joining, Ace Colin. Hello there, Carol from California. And again, for those who also share this stream and comment, I will be choosing 2 lucky individuals to have a phone call with myself where I'll bring tremendous value. I'll take as much time as you humanly need to go over whatever questions that you may have, whether it's real estate, finding a property, how to negotiate the deal, how to work the transaction with the closing company, just any type of question associated with single family acquisition, also multifamily, and some branding as well. So let's get right into the meat and potatoes. So the first myth or the lie is basically that I was brought up on is save, 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 which with that, there is a funny saying on that too, is a penny saved is a penny earned. At the end of the day, a penny is a penny. So that's a little funny on that. And I would say if it was save, save, and invest, that would make more sense, because saving ultimately nowadays is you tend to get a better investment when you actually invested in something that's going to produce some income and you get a return on those funds. So hello, thanks for joining, Maurice. All right, Karen Kirby, I will pick you. I'll just pick you anyway. So Karen Kirby, I will pick you after this, and we will have a phone call. So I'm making a commitment right now on the stream. So there we go. And then the second myth is it's more of a saying, and these are I would say essentially brainwashing, and most of it is people have the best intentions. Well, let's say my mother had the best intentions when she was telling me these specific things, but ultimately it was just bad advice overall. So, love you, Mom. And so the second one is money can't buy happiness. And through that is just saying that that's just another way that's holding people back from actually wanting to achieve more in terms of building wealth and income. And money may not buy you happiness, but it sure as hell solves problems. So just give you an example. If you have a relative that is, let's say they're experiencing health issues and they need some money, then in that case that, let's say you don't have that capital because you haven't built up that nest egg in that case, then now you have another problem on your hands versus if you had the money, you could pay for the surgery and then they're healed. Well, hopefully. So there's that. Money can't buy you happiness. One of those things. And also everyone who is here, I would love on YouTube and also on Facebook. Thanks for joining Charles Kennedy on YouTube from Philly. I would love to hear the sayings that you heard growing up as well. So please comment. I would love to get those because I may miss some. There's tons of them out there. Like, as I mentioned, penny saved is a penny earned, which is just a penny. And then the third point is go to college to get a college education, which ultimately will get you a higher paying job. So with that, it may have worked in the past, but nowadays, specifically with my generation, is that people are graduating from college with huge amounts of debt and not even able to get jobs, or they're getting jobs in which they could have gotten without even going to college. So that's a whole nother animal in itself. I'm a believer that college is good if you have a specific direction that you're, well, either networking or if you're looking to be a doctor or a lawyer where you have to go to college. So the fourth point is all debt is bad debt. And so with that is from my personal preference is that not all debt is bad debt, only the debt that you go into that is more of a liability. So let's say you get a loan on a specific car, depreciating asset. But if you're able to achieve, got a text that came in here. But if you're able to achieve, let's say, you're utilizing a loan or leverage on a specific multifamily asset where other people are paying down that loan, then that's good debt. So I would say right now I'm just a little over, not counting my student loans, $5 million in debt if you count on all the loans that I'm signed on for the multifamily side. So that's a little bit about that. But again, that is paid down by others. It's not a liability necessarily. So, and I'm also getting income on that. And then the fifth point is you have to be rich to start investing. So while that's not true whatsoever, myself personally, I started investing in real estate at the age of 22. So again, I know I'm blasting through a couple of these points. And then the sixth one is that banks are the safest place to keep your funds. While that may have been that in the past, that due to inflation, you're actually losing money with your funds in the bank. And it's best to have that in assets that is getting a return on your money. So for instance, that is real estate, to where you're getting, you're investing money in something and your money is working for you. So that's where I'm getting at. And now banks, believe in the past with when you would put your money in the bank, you would actually get anywhere between 6 to 12%, but now it's just parking your money there and not even earning anything on it. So again, I'm gonna go over the points. First one is save, save, save. And this is the 7 lies we were told growing up. And let me go ahead and see if there's any questions that's here. 1 million pennies equals $10,000, makes sense. And so we've got the first point is save, save, save. And associated with that is penny saved is a penny earned, which a penny is a penny ultimately. And that it would make more sense if it was save, save, invest. So save to invest, because ultimately, if you keep saving due to inflation, the cost of the money, the cost of the dollar is going down in value nowadays. So, and then the second is money can't buy you happiness, which that is true ultimately, but money does solve problems. So the more problems you're able to solve, the actually happier or the more enjoyable life is. So that's just my preference on that. The third one is go to college to get a education. So you'll be able to get a higher paying job, which ultimately now for my specific generation is people are graduating with these large amounts, hundreds of thousands of dollars in debt and not even able to get jobs. The fourth one is all debt is bad debt. There is good debt out there, specifically leverage. So if you use a loan to acquire a single family, multifamily, and someone is actually paying down your loan, then that makes it a good asset. And again, for those of you who are on Facebook and also YouTube, please share the stream. I will be giving away 2 phone calls to individuals to where I can give tremendous value on a one-to-one. And through that process, it's whatever questions that you have that's over branding, property acquisitions, marketing, etc. And then the fifth is you have to be rich to invest. So that's not necessarily true. I started at the age of 22. And then the sixth is banks are the safest place to park your money, which due to inflation nowadays that you're actually losing money with your funds in the bank. It's best to get that in an asset that pays you a return on your money, so your money is working for you. And the seventh, I forgot the seventh, which is, and this, I know this is highly debatable, of course, is that your house is an asset. House is more of a liability due to an asset is actually an asset is an asset that, a house is supposed to, what is that word I'm looking for? It's supposed to ultimately put money into your pocket if it's an asset. So from that, a house is a liability. Not only is for you to get a return on your money, or let's say the equity that you have built into the house that you have to sell it. What if it's the 2008 or 2009 where you're not able to sell it? Then that means you're stuck. So that's why oftentimes your house can become a liability. And then with that, you got to pay for repairs, keep maintenance, got to pay property taxes. Same with the investment property, but you're still going to have someone that is helping you pay not only that mortgage down, but also to make those repairs as well. So love to hear others' thoughts on those points. I know I just went through them. Thanks for joining Sean Walsh on the stream. And so let me see if anyone has any questions here. All right. This person, Adam McCurdy, says, what do you say to people who call you a slumlord or that you are driving up rent prices in tough markets? Happens to me all the time. I would say with that, it's not necessarily you that is driving up the rents, Adam, and that's Adam McCurdy from YouTube, that it's all about supply and demand. So if you're pushing up rents and people are paying that, then that's the market. The market is the market ultimately. So if you, let's say you're charging $1,100 a month, and then the following year you can charge $1,200 because people are willing to pay that, then you as a landlord, you wouldn't keep it at $1,100. So that's just the market. The market is the market. So that is a great point. This person says, should I take over a turnkey property multi-unit with a tenant behind on rent or wait till owner takes care of it? That is Mark Upshur on YouTube. That is a really great point in terms of if that person is behind on rent when you're taking over I would push it on the owner to take care of that. But one thing on your end, Frank, is there's a potential that you could lose the deal because someone would be willing to actually purchase that property with that troubled tenant and then go through the process of course, acquiring it and then evicting them. So that's one thing you have to be cautious of. Some people may want to take on more of a risk and purchase that property and go through that process themselves versus you may not. So on that one, so it's just ultimately what you are comfortable with. Myself, I would not mind with I would just purchase the property at a deeper discount, knowing that once it is acquired, I'm going to have to go through that process of evicting the person, longer vacancy, and then I'm going to have to turn the unit and get a tenant in place. But as long as that's factored into your numbers, you should be fine. Just purchase it at a purchase it at a price that works. Knowing that, hey, it's going to be an extended vacancy because this person's not paying rent and I'm going to have to get them out. This person says, do you only invest in real estate, or do you also invest in some stock or even some high interest bank savings? That is from J Rock. So me, for instance, I heavily invest in real estate, just solely about 99%. Also have just a couple $1,000s that's in some mutual funds, but that was put way back when. So that's just there, just sitting there. That's through an IRA. So, but ultimately all my cash goes into real estate because I know it and I ultimately control where it goes, or where I have control over the asset. So no one's going to watch my money ultimately like I am. And also I invest with my investors as well. How do you get 300 doors? You acquire. So that 300 doors is comprised of single family and also multifamily in about 2.5 years of acquiring. And through that is using my partner's personal funds and also leveraging private money too. So that allows you to really scale things out and acquire. But that was when we were buying. You can get things a lot more cheaper than you can now. So we were really on the our foot was on the gas on the acquisitions, but now we've had to cut back due to the tightness of the markets, and people are just willing to pay outrageous prices. So we got to be more diligent. What's your advice to someone that has no experience in real estate but looking for the first baby steps into investing into buy and holds? So that is from Denton on not BiggerPockets, but on Facebook. And the route I took to get started on the buy and hold, so I shifted from construction, get my hands dirty, and I've got pretty hands, so I didn't like get my hands dirty too much. And I actually found someone who was my mentor who was looking to shift from multifamily or diversify himself into single family. So I was able to partner with that person, and they were wanting to do the buy and holds. So I brought them a couple deals and was able to partner with them and learn everything associated with managing contractors, renovating a property, and the transaction with the closing company. So that's one thing I would recommend. Just work for someone who, and this is again just speaking from my personal experience, is work for someone who is doing what you are looking to do on the buy and hold side. And then I also did some wholesale deals as well and some flips. So to renovate a property to a homeowner, and then I was able to get some chunks of cash and then just basically plow that into the buy and hold side. Oh, there was quite a bit of questions. They all just disappeared. Have you ever accepted a tenant with an eviction? Do you change the terms of lease to limit your risk? I do not accept tenants with eviction, especially within the last 7 years. So if that's on there, red flag, we don't accept. So that's something that I have not run into. Do you follow the BRRRR method, which is on BiggerPockets oftentimes? So think that's buy, rent, and repeat. This person's got a couple additional R's on there. So, but yes, do follow that model where just, buy it, value add, reposition it, and then refinance, and then go do it again. How did you start in real estate? What was your first property? That is Audi Rings. That's what I mentioned a little while ago, is I actually partnered with someone who had the cash but didn't have the time to find the deals. So that's ultimately what I brought to the table. I took the time and found the deals for that individual, and instead of just taking like a simple wholesale fee, I actually was able to retain equity in each of those single family investment properties that I brought to that person. And I did just about everything in terms of on the management side. These questions disappear. There were some good ones in here. All right, let me scroll through it. Where do you feel we are in the housing cycle? Do you think we are in a bubble at this point? I would not say we are in a bubble. Well, specifically in Indianapolis, I'm not familiar. I don't know what market you're from, Carol Davis, who is on Facebook. So each market is different, but here it's just slowly and steady. Indianapolis is more of a cash flow market versus in maybe New York or Arizona, Florida, or even California, where the appreciation, you get more of that. But here it's just a steady growth of the rents in addition to the, the value of the assets. I purchased 10 properties, but I'm ready for the next level. Can you help? Yes, I can. That's what I'm here for, Kirby. Karen Kirby. KK. All right. So, all right. So I would say those are, again, let me see, granted, some good material though. So, all right. Well, those are the only questions. Again, if you guys have anything else, do not hesitate to reach out to me on, let's say, on Facebook, slide into my DM. And then also on BiggerPockets, you can reach out to me as well. I'm more than happy to bring as much value as possible. I'm more than open and transparent. And then also, again, for everyone who shared this stream and also commented, I will be picking two additional people now that I picked Karen, to have a phone call with myself, and I will bring tremendous value to you. Actually, there's a couple questions right here. Do you do probate deals? How should I get started? Yes, love probate deals. And on that, I specifically did not chase after probate deals. They simply just came in from the marketing. And probate just means that there is maybe someone's passed, and now it's going through the legal process to go to the heirs. And through that, a lot of times those heirs want nothing to do with the property. So that's when you're able to get it at a deep discount. Do you recommend a property manager for 2 properties if you work full time? Yes, I would. Because you're ultimately Nancy, hopefully I pronounced that correctly, is your time is not scalable, and just delegate that to the professionals. But if you have some very nice properties to where there is little to no maintenance and also tenant relations, then you could manage those yourself. But if they're more management intensive, definitely delegate that, because that could take up quite a bit of time. But it's only 2 properties, so that shouldn't be so bad. Can you touch? So we got, would you recommend a house hack for a unit? Me personally, I would say, if you're comfortable starting there, it looks like Section 8 millionaire, then go for it. I'm more of just going a little bit bigger, so you'll be able to get economies of scale. I transitioned from single family and then went straight to a 46 unit apartment complex. So, and then through that, I think I bought within the 2.5 year period. Okay, we cut out there. My apologies for, hopefully I'm back on here. But the question was, house hack is just simply if you're able to just scale up, maybe start with a 20 unit due to So you'll be able to capture those economies of scale. Because what I was mentioning is, for myself, I had just a little over acquired 200 single families. And then through that was probably 100 to 150 transactions versus that one 46 unit apartment complex with just one buyer. So that's just one thing to consider. And there's all other things due to economies of scale as well. So hopefully that I am getting through on here. All right, I think I'm good. Okay, this thing cut out a little bit. So let me see what other questions that's here. What's your best marketing method? I would say cold call and also direct mail, but cold call is a lot more effective because you can actually have better chances of getting in touch with the decision maker. All right. Ooh. Okay. All right. Well, thanks again, thanks again, all you guys. Hope I did bring you some value. I will see you on the next stream. Enjoy your lovely days, and I truly do appreciate everyone in the community. Thank you so much for your time.